I have recently noticed a pattern becoming much more common. The more expensive something becomes, the less companies seem to want me looking at the full price. A car is no longer $100,000, it is $1,500 a month. A phone is no longer $2,000, it is $85 a month. And once the number becomes small enough, I stop asking whether I can afford the thing. I start asking whether I can survive the payment. That is a very different question. I am not saying installments are a scam. They are not. The numbers can be completely accurate, but the way it is presented encourages shorter-term thinking. A $100,000 car feels expensive. $1,500 a month feels manageable. So instead of calculating the total cost, I start calculating how much of my salary is needed every month. I think less about how many years I will be locked in, less about the total interest, less about the effective interest rate, less about what else that money could have done for me. The numbers are not fake, but the framing changes the decision. And now, this idea has moved from large purchases into small ones. Buy now, pay later. Historically, borrowing was mainly used for homes, cars, or businesses, large purchases. Now, even a shirt can be split into payments, a phone accessory, a small appliance. Technology made this profitable. One small transaction is insignificant. Millions of small transactions? That is a different story. And the opportunity becomes even larger in developing economies, where spending power may be lower, but smartphone adoption and population can be enormous. Many people may not have strong access to traditional credit, but they have a smartphone, they have internet access, they see the same products everyone else sees online. Buy now, pay later turns that gap into a business. Small payments, huge volume. Automated approval, spending data, economies of scale. The provider may earn from merchant fees, interest, late fees, or some combination of them. The amount from one purchase may be small, the scale is not. From the business side, it is very clever. From the consumer side, the danger is accumulation. One payment looks manageable, then another, a phone, a car, a subscription, a credit card balance. Each one looks small. Together, they start eating up your income before you even touch it. Car loans use the same logic at a larger scale. As cars become more expensive, the monthly figure becomes even more useful to the seller. The buyer asks whether the payment fits his salary, not whether the total price still makes sense. Again, not a scam, more like a manipulation of attention. The seller puts the most comfortable number in front of you. You have to do the harder calculation yourself. Student debt sells something even more powerful. Not just education, a future, prestige, family respect, academic achievement, sometimes ego. Education can absolutely be worth it, but it is still a financial decision. And once the price becomes large enough, it deserves the same cold calculation as any major investment. What job does this degree actually lead to? How many graduates find work? What does the job market look like? How much will I realistically earn? How many years before I recover the cost? That is not being negative, it is being realistic. A dream can still be a bad deal. Then, there is the mortgage. Probably the most useful form of debt. Also, the longest. 25 years, 30 years, sometimes almost until retirement. The payment continues whether you are employed or not. Interest rates change, the economy changes, politicians do something stupid, property prices can fall. Maintenance continues. And yes, you own an asset, but the bank still expects payment every month. The real cost is not only the interest, it is the loss of flexibility. Maybe you cannot leave a job you hate. Maybe you cannot take a lower paying opportunity. Maybe you cannot move. Maybe too much of your future has already been promised. Monthly installments are a tool. Used properly, they help people buy homes, build businesses, and use leverage intelligently. Used badly, they can turn your future salary into something already spoken for. The problem is not the monthly payment itself. The problem is looking only at the monthly payment. So before asking whether you can afford it, ask something colder. How much does it cost in total? How long am I locked in? What happens if my income drops? And what future choices am I giving away today?